Welcome back to the Real Estate Standard Podcast, episode 23, where commercial real estate and Bitcoin collide. I'm your host, Tim Kotzman, and each episode here, we break down how serious operators, investors, and developers stay competitive and profitable in the 21st century by examining commercial real estate through the lens of Bitcoin. On today's episode, I'm joined by my co-hosts, Chris Drizga and Kenny Alves. And I'll throw it over to Kenny for an update on West Main storage stacking.
Thanks, Tim. As of today, June 8th, we hold 14.76 Bitcoin, 1.47 billion Satoshis. So far in 2026, we've stacked 12.58 Bitcoin, 1.25 billion Satoshis, giving us a Bitcoin yield of 575%. What does that mean? We've almost 6x'd our Bitcoin stack since we started here. Our Bitcoin per square foot, which you can see in the bottom right, is now at 21,271 Satoshis. We're quickly approaching Bitcoin parity with square footage. We're about 378 sats per square foot away. And we get that number by taking approximately all the US commercial real estate square footage, which is 97 billion square feet, and dividing it by 21 million Bitcoin, the most that there ever will be. And that number is 21,649 sats. So we're quickly approaching that. It looks like we might hit it sometime next month. I'm going to switch the screen over here to our real estate tab. We're going to show off that we got some new cards to display. We have 3 years and 4 months and 24 days of Bitcoin mortgage coverage. We also added what our digital credit covers. So we have accumulated over 10,000 shares of Stretch, and right now they cover 3 years and 6 months, so 3.5 years of mortgage payment, and combined, that's 6 years and 11 months, just under 7 years. So that's a new thing on the dashboard. I got a few more things, but Chris, I wanted to get your opinion on that first new update to the dashboard showing our mortgage coverage and digital credit.
Great updates and incredibly powerful, just visual metrics here. I was just kind of thinking here, when you look at the almost call it 7 years of coverage, right? 6 years, 11 months. I thought back to the 2008, 2009 crisis. And if you were, that was such a heavy, real estate focused crisis. If you had 7 years worth of coverage in that period, 2009 to 7, I mean, you're all the way out to 2016, right? I mean, it took 3-4 years to really crawl out of that, the depths of the GFC. So, again, just kind of thinking about your strategic optionality and your treasury reserves here, and what that does for you from an operating standpoint is, I mean, it's incredible. I hope we don't find ourselves in a real estate downturn where you're testing this. But again, I think it goes to the broader flexibility you have. Kind of similar to how strategy has 30 plus years worth of dividend coverage on the balance sheet. I mean, it's kind of hard to get your head around that, and I think the same is true here.
Yeah, let's jump over to the strategy dashboard for a minute here, just because the reason we have a dashboard for West Main is largely in part due to strategy. They made this the norm in the Bitcoin treasury space, building in public and being transparent with everything, with live updates. And so yeah, we can look here and we can see that they have $53 billion in Bitcoin reserve. And instead of looking at it for their mortgage, they have their preferred dividends. So they have 31 years of dividend coverage measured in Bitcoin. They also have $1 billion in USD just sitting there for reserves. And they even have this metric right here, which is the Bitcoin break even. That means their Bitcoin only needs to appreciate 3.2% a year right now to cover their dividend payments. So historically, in the past decade, Bitcoin has been somewhere between 30 and 50% CAGR, compound annual growth rate. Um, and this is kind of where we get a lot of our inspiration for some of our metrics. And we can see they have a whole page dedicated to stretch. This is the preferred that we've invested in at West Main. We have $1 million in here, and it's gone down from par. We're 3.69% away from par. And comparing it to Bitcoin, they have a page here for Bitcoin. We can see this. Bitcoin has had a little bit more volatility than stretch in the past weeks and months, so to speak. So, management is working to do whatever they can to bring this number to par. But in times of stress, like if people, it's a very liquid instrument. It's one of the most liquid traded instruments on the stock market. So when people need to access their capital, they sell stretch. And this is something we would do in the scenario you just presented, Chris. If it were like great financial crisis situation and we lost tenants or tenants aren't paying rent, we could sell the stretch that we have on our balance sheet. We don't want to, but it's like our first line of defense. We have, our storage income, then we have our dividend income. And if that's not sufficient, the next step is to sell some of the stretch. And we have a large buffer there. And then we would have the ability to sell Bitcoin. And obviously, like, we don't want to take those steps, but it's there as protection. It's better than getting your property foreclosed on. So it's all about the optionality. And I'm going
I
to
also
switch back.
think just keep that there for a second, Kenny. I think
Sure.
the other really important thing to note here, especially with STRC trading below par, and the Twitter sphere going crazy the last week, 10 days, whatever it's been. The STRC position is a medium-term capital bucket, right? This is not your day-to-day checking account. So if you're not using these funds to pay immediate operational needs, right? So you can see if there is a crisis, some kind of credit crunch, what have you, I expect STRC to trade down. It's going to trade below par for some period of time, but we know that management is doing everything they can behind the scenes to get it back up to par. And there's also, incentives in the marketplace where, larger players would, jump in at, this level and even lower just to catch that, that arbitrage there. So that's a long-winded way of saying there's a reason that STRC and digital credit products, whether it's this one or others, is a medium tranche capital bucket. We've been talking here on the pod about that being your 4 to 12 month time horizon bucket. So I just wanted to kind of add that because I think that is very necessary, context.
Yeah, and I'll even make another comment. Like I start looking at it as medium to long term, right? It's like your emergency fund if you need it. But ideally, the ideal situation is you don't touch it and that you get this, tax deferred income stream. And like there's no reason to touch it. But if there's an opportunity that comes along, like we've talked about in other episodes, where there's the real estate market is looking attractive, we can pledge this as collateral or sell this, and we have optionality. And I think like that word can't be said enough, because what we want to do is have as many levers as we can to make the best decisions on behalf of the company. And I'll switch over back to our dashboard. There's a few other things I wanted to point out to you. I don't know if I just updated it this morning, so I doubt that you have seen it. But we talked about would West Main self storage ever do a tax loss harvest? And this was a couple months ago, I think, when we discussed this, Chris. And at the time, our Bitcoin holdings weren't, um, we had much less Bitcoin. We just had a big buy about a month ago at the $82,000 range, and we didn't really have enough losses to capture a loss. With the Bitcoin price going down to the low 60,000 range, we can see right now live it's 63,000. We're sitting on an unrealized loss right now of 316,000, a 25% from our cost basis at 84,000. So now it starts to, we have to revisit this. We have to think what's best for the company, what's best here. And another interesting thing is because we haven't been holding for a full year yet, if we were to recognize this loss, it would be a short-term capital loss, which is genuinely more attractive than a long-term capital loss. It's easier to use against a gain in some scenarios. But I worked with Claude over the weekend to add this to the dashboard here, and Strategy had released a chart kind of showing all their lots of Bitcoin purchases, and I thought it would be good for us to do the same. Um, and you can see we accumulated 1.3 Bitcoin between the $60,000 and $70,000 range over 9 buys, right? And then you can see our most expensive Bitcoin over here, where we bought Bitcoin above 120 twice. And we got a full breakdown here of our highest in and first out. And we can say, well, maybe we don't want to, this would be our first time selling Bitcoin. Maybe we don't want to sell all our Bitcoin. Maybe we only want to sell 3.2 Bitcoin. We can see, we can recognize $115,000 loss, and we can carry that forward 20 years. And being in the real estate business as well, we don't know if we're going to acquire property in 5 years from now that we may want to sell, and this can offset capital gains with a real estate sale as well, because Bitcoin is property defined by the IRS.
I'm glad you added that there, because I was just saying, for the real estate folks listening, they may not realize that the classification that Bitcoin has allows you to do this. So you can,
and there's no wash trade rule.
That's exactly right. So what Kenny's talking about is the property classification, and the fact that there's no wash sale rules, allows you to sell the asset today at a loss, pick that loss up for tax purposes, and then you can buy the Bitcoin back instantaneously or right thereafter, and still have a exposure to the spot asset. This is Bitcoin real estate 301 level. I would not recommend this for the new people getting in and still getting their feet wet. Kenny and West Main are, they've been doing this a very long time. They are comfortable with both assets. They, as you can see here, have incredible record keeping. That's another important point we have to, kind of emphasize, is the importance of not only good record keeping, but proper governance as well. If you're thinking about applying this to your asset or your portfolio, whether you have multiple partners, or it's you on your own, or maybe a husband and wife type of ownership profile. So all of this kind of builds on top of each other, and allows you to consider and ultimately execute on these little bit more sophisticated approaches. But that all said, Kenny, I love it. I think you're the analysis here is top notch, and this is our version of turning certain dials up and other dials down, right? We can turn up a dial to accomplish a certain objective, and turn a dial down to do the same, or to navigate a certain market environment. So really, really, really good stuff. I like the addition to the dashboard.
Yeah. You know, even though that we're experienced, we're kind of planning on stacking Bitcoin, and we weren't really considering a tax loss. But the reason why we're talking about this, I think, is because something controversial happened last week where strategy sold. Let's bounce back over to the strategy dashboard just one last time, and I think it's on there. We'll see where it is. Um, it's over here somewhere. Purchases. So you can see that they have, we're on our 46th purchase. They're on their 112th purchase, and obviously they're much larger. But you can see on their 111th purchase last week on the first, they sold 32 Bitcoin, and this is kind of got what got us thinking about, like, well, why would you sell your Bitcoin? Well, you can book a tax loss, which we just went over, and I think that as a company, you may want to look at this because you're trying to maximize shareholder revenue, right? Like, as an individual, I don't think it's worthwhile to play these kind of games, right? Unless you have a substantial tax loss. But I think what they're doing here is they're just kind of educating the market that they have more options than you might realize, right? And this is one of them. And I think it set another very important precedent that they will sell their Bitcoin to pay the stretch holders, or the preferred shareholders. And another reason why we're going over this dashboard is we own $1 million of stretch, and we want to understand the management's plan here, and we think it's important to keep a pulse on the strategy dashboard. But we didn't get a chance to talk about that last week. I'm curious to what you think about that, Chris, because for a long time, the motto was never sell your Bitcoin, and you know when the price goes the other way, like, why not? If you can buy it back, if the rules are in your favor, if there's um you have the ability to do it, why wouldn't you? And that's what we're thinking about. Like, do we like the idea of selling Bitcoin? No, but it maximizes shareholder revenue.
Yeah, I mean, if you're like us, and following all of this as closely as we are, the Bitcoin sale in my eyes was you know a blip on the radar. It should have been a non-event. I mean, one, he had been telegraphing this move for quite some time leading up to it, and secondarily, this the 32 Bitcoin sale is so infinitesimally small relative to the broader holdings that they have. It's like, who cares? He did it just to kind of, poke fun at the naysayers, I suppose. But going back to the strategy here that we're talking about, I mean, he sold 32 Bitcoin. Does it show me what the cost basis was on those?
I mean, the average
No.
BTC price in the case of the average cost of the all Bitcoin purchases, I don't know if that was the average price of the Bitcoin he sold. It might be listed somewhere.
I mean, for conversation purposes, like, let's just assume the 32 Bitcoin were higher cost Bitcoin, higher cost basis Bitcoin, right? So he sold that, he booked the loss, and he turned around the next week and bought 1,550 Bitcoin more. Like, that, if that's not just conviction in the overall strategy, I don't know what is. But to me, it didn't bother me whatsoever, and I'm I like as a shareholder the fact that him and the executive team are looking at these different options as close as they are, and they're tweaking the dials and pulling the levers on their own dashboard as they are. So, yeah, those are my thoughts there.
Yeah, the average sale price, that was the average sale price, 77,000. So, um, it was only 2.5 million. I say only 2.5 million. We're still trying to accumulate 32 Bitcoin. But
Well, but I think average sales price is the price that they sold those 32 Bitcoin for. I don't know that that's necessarily the what the cost basis was,
yeah,
right?
true. Good point. Good point. I
So
don't know if it's going to be
either
there.
way, I mean, let's just give them the benefit of the doubt that it was higher cost basis Bitcoin. There's another thing I wanted to kind of talk here. I mean, with these dashboards, Kenny. I mean, whether it's MSTR's dashboard or the West Main dashboard, I think it's incredibly powerful, and I don't think the market is fully appreciating what's going on here with these dashboards. I mean, everybody's got their Claude agent now, and they're spinning up these really cool dashboards and real-time trackers and all that, which is cool. But what is really happening here is you're getting just radical transparency in real time, right? And that is really cool. That is something very new to financial markets. And I really don't think that markets and executives and the incumbents are really ready for that. I don't think they fully thought through what real-time updates on the health of a company or the health of your balance sheet actually means, as far as um, competing in the marketplace, staying relevant, attracting capital, and just operating. And I think there's another thread there that could be pulled on a handful of different ways. And to bring it back to West Main and real estate, when we started doing this 6 months ago, we're doing something very, very different than your traditional real estate play. And kudos to you for what you called me up and said, hey, I want to do this, but I want to do this in real in public. And do you remember what I said to you?
Yeah, you're going to give away the playbook, and
Well,
somebody else is going to eat your lunch kind of thing.
I said that, but I also at first I didn't know what you meant. I said, what do you mean by that? And then once you told me, hey, I want to do a podcast and I want to track our performance in real time, I mean, let's do it. If that's what you want to do, I'm all for it. And 6 months later, I don't think I think that was the absolute best way to go. So kudos to you for having that foresight, and thank you for giving me that little nudge that I needed, because we need to, if we're going to change the way real estate investment and capital allocation is done, we need to be this transparent, right? We need to have the real time data points so that people can check it out for themselves. They can try to poke holes in it. They can raise objections when and where they're able to. We're not sitting here pretending like we have all the answers and this is a silver bullet. It's far from it. So the dashboards and having the real live data points is incredibly important.
Yeah, and I like, to your point, like, most operators don't share information, especially private companies, and like, I just think about, when maybe 20 years ago now, like before websites and online pricing was a thing in the self-storage industry, operators would keep their prices like so close to their chest, like they didn't want to tell you the prices, right? And if you were a customer, you had to like drive around and go to different facilities and get prices. And I remember when we first got a website and I was like, we're gonna display our prices on the website. And there's my dad used to, like, keep the prices, private. So, it was kind of like a big step, like, being willing to, like, list your prices. What if other competition see your pricing online and they can undercut you and match your pricing, and you think of 100 reasons not to do it. Um, and but it's the right thing to do if you're trying to educate a market, and give people be respectful of their time. If like somebody's looking for your price, you want to make it as easy as possible. They're going to remember that, right? If you're like, hey, I had this one guy, I was calling him on the phone, he wouldn't give me a price. I had to go in and go look at the unit to get a price. These other guys, they would rent to me right online. I just clicked the button and I could rent a storage unit. Which one are you going to go with, right? Maybe you don't have the time to go shop around, like you did 20 years ago. And so I think like just transparency in general, um, is going to just be more prevalent in business moving forward. I think trying to hide things from your customers is going to backfire. And it's like, why do you want to be opaque? Like nobody benefits from that really, right? And so I think like we got to embrace transparency and being open. And that's what we're doing. We're trying to lead by example. We're trying to get others to adopt Bitcoin and maybe transact in Bitcoin and denominate in Bitcoin, use it as a unit of account while making business decisions, right? Because Bitcoin can be used as a unit of account, just evaluating your business, not necessarily spending your Bitcoin. Maybe you want to think about the ramifications Bitcoin first. And how are we going to get that message out if nobody's willing to be transparent about it? And there's risks that
Yeah.
others might copy, and that's certainly something that could happen. And we looked at like, oh, what if our local competitors copy? And it's like, well, that would be a good thing. If our local competitors are going to add Bitcoin to their balance sheet, that's good for Bitcoin.
It's a complementary, asset essentially, right? I mean, if people start copying us and adding Bitcoin to their property operations, okay, it's ultimately just going to help us, right? I mean, number go up. So that's another thing I don't think the market fully appreciates or has understood just yet is, the more participants in this network, the better it is for all of us. And that in and of itself is a radical idea or a radical mindset shift in and of itself. You know what I mean? I had with the volatility in Bitcoin the last week, 10 days, I've had some of my my real estate friends reach out to me on that topic, right? Because they know what we're doing here. And I got a couple of the text messages checking in on me, making sure I was okay and all of that. And so we were having this conversation, and again, they were the real estate guys, and it kind of dawned on me. I was like, sure, Bitcoin's been is volatile, but it's also trading 24/7, 365, and it's in real time. It's like instantaneous gratification. But if you think about real estate, in some ways, like it can be just as volatile. What do I mean? If you have a 2-tenant building and one of your tenants goes out of business or vacates, right? You went from 100% occupancy to 50% occupancy. Your NOI got cut in half overnight, right? It's a little bit different because it's not, in your face on your social media feed or on your, your phone at all hours of the day. But from a financial standpoint, your value just got halved, right? And now, like, are you going to go sell that real estate asset at the bottom when you're 50% down? No. What are you going to do? I'm going to lean into it, something that I know really well. I have done the work. I have invested in it. I'm going to double down on my conviction because I love that shopping center. I love that storage facility, right? And I'm not going to sell until I get it back up to 80, 90, 95, 100% occupied, right? Same thing goes with capital expenditures. You're investing capital to improve the asset. This goes back to the time horizon conversation that we have periodically, right? Like long-term thinking. Like, and that's one of the more frustrating things for me when I'm trying to orange pill some of the real estate guys, because they get into real estate, one, because they're successful in real estate because they have a longer term time horizon, right? So anyway, I'm kind of on my soapbox here now, but the vacancy example with real estate and how volatile the NOI can be from that standpoint, I thought was just a good kind of antidote to the Bitcoin volatility.
Well, the liquidity too, right? Like if you do
Yeah.
need to sell the real estate, maybe you're looking at selling the one of the least performing properties in your portfolio, and you just need to liquidate. Maybe there's another deal. Maybe life just happens, right? Um, how long is it going to take you to sell it, right? You're going to have to go
Yeah.
find a broker. They're going to want exclusive listings. You're going to shop that around. You're going to make sure you list it with a good broker. How many other listings do they have? What's the market like? Is it going to take 30 days? I don't think so. It's probably going to be, months before you actually close on it. And you might not get the price that you want. So if you have to actually sell the property in a single day or in 30 days or something like that, you're going to be taking a haircut. You're not going to get the price that you could get if you hold out and wait. And that's similar to Bitcoin, right? Like I think that this is the time to double down. Like you said, like you double down on your real estate, you double down on your Bitcoin too. You study more, you research more, maybe you acquire more, you figure out what else you can do to get more. Right now we're excited because we're in the middle of a refi. We had an appraiser at West Main Storage today. We got a phase 1 ordered, so we've signed a term sheet with the bank, and we're moving the ball down the field, and we're trying to close this refi and take advantage of these prices. So we're like, we're excited. We're excited when the Bitcoin goes down. We're excited when it goes up. We're just excited for Bitcoin because it's unlimited deal flow, and it's always a good price if you have a long enough time horizon. Just like real estate is probably always a good um, purchase as long as you're doing it, in an area that is, not falling apart. You might not want to buy anything in downtown LA, but as long as you're in a good location, like they say, location, location, location. So, um,
Yeah. I mean, the illiquidity of real estate is what, I mean, really holds people, from doing those fire sales, right? It's not only illiquid, but it takes a long time, right? So if you're in that scenario where, you are in a tight bind for some cash, it's 30, 60, 90 days to liquidate the real estate. So, a lot of times you can kind of see somebody maybe find alternative solutions to bridging that liquidity need in that time period. There's Bitcoin, there's digital credit, there's all other kind of financial instruments that have that liquidity. So anyway, I really enjoyed my vacancy example with my friends there. I could tell that it got their wheels turning after I kind of laid it out from that standpoint.
yeah, I think Tim has a quick message for us before we wind down here.
We'll be right back. Quick note for property owners listening to the show. If today's discussion sparked questions about how these strategies might relate to your own building or portfolio, we're always happy to have a conversation. No sales pitch, just a thoughtful discussion about your property, your capital structure, and the options available in today's market. You can find our contact information in the show notes. All right, and we're back with Chris Drizga and Kenny Alves. We're live. I mean, unless you're listening to it later. Back to you, Kenny.
Yeah, you just played the the commercial that you had there, and I've been taking calls with like a lot of small business owners and just real estate guys on the side. And, I thought it would be a good time now just to talk about, what kind of first steps you can take to start putting Bitcoin on your own balance sheet. Um, and it's it's really just getting the management team comfortable with Bitcoin, having that conversation, and maybe downloading a few wallet and exchanges. I don't like to recommend any one over another, but there's several Bitcoin only wallets and exchanges that I like to use. There's Strike, there's Cash App, and there's River, and there's some other ones coming online like Castle. And I think these are all kind of great options because they're Bitcoin only. You don't get distracted by 100 other um, shit coins, for a lack of a better word. And yeah, that's like step number one. Step number one is to find a Bitcoin only exchange wallet and add $100 and start off with a small amount and get your feet wet. And um, from there, Chris, you wanted to join in there?
I was just going to emphasize the importance of finding or utilizing a Bitcoin only provider, right? Whether it's River or Swan, Hodl. I think there's a handful of them out there, but the reason you want a Bitcoin only exchange is I mean, you said it, Kenny. It's they're laser focused on one thing. There's a lot less variables at play. There's a lot less technicality, and ultimately, fewer things. The lower the probability of something going wrong. I like River personally because they publish their proof of reserves. I think it's once a month. And then the other thing I like with River is that they pay, your cash balance. Like you think about real estate operators, it's capital intensive business. Most of us have or carry higher cash balances than the average business. Your cash sits in River, and every month it pays your interest. I think it's 3.3% right now. That interest payment is paid to you in Satoshis. So to your point, Kenny, if you're looking for a way just to start small, get your toes wet, opening up a position or an account on an exchange like River to see what it's like to buy some and export it to your wallet and send it around and maneuver it. That's a great starting point, and it's also a great way to start stacking Sats passively. So with the however much you got on there, maybe get a few hundred Sats a month, maybe get a tens of thousands Sats a month, whatever your balances are. But I really like it for those two reasons.
Yeah, and then step number two is really trying some hard or cold wallets, some hardware wallets, and same thing. Like I would recommend doing Bitcoin only hardware wallets. You don't want anything that's like unnecessary. And there's several providers. There's CoinKite. There's what is the Square one now? It's BitKey. I think the BitKey is actually really good for like somebody like just getting their feet wet. They have a really good onboarding process. There's also like the more um, hands-on ones that you can build from like spare parts. I think like Seed Signer has a good guides where you can buy the materials online or through hardware shops and assemble it yourself. But that's a little bit more complex. I think a good starting point is something like BitKey or CoinKite. There's Blockstream. There's a few others, and you don't have to do everything. I think like some people think that you may have to do everything all at once. And I think it's fine to take your time. I think you can buy some Bitcoin on an exchange, just get used to that process and having an account there. And you're probably going to be frustrated with all the paperwork and taking photographs of your ID and uploading it and tech support. So pausing there and then going to the next stage a couple weeks later and getting a hardware wallet and just doing it so you don't overexhaust yourself. I think that's a big thing. I see people kind of um, trying to conquer everything in a single day, and they might get burnt out. It might be information overload. So one thing I would just recommend is start small and just kind of spoon feed it until you're comfortable, and then you can increase allocations, increase amounts, and try other wallets, try other exchanges, and um, you know, yeah,
There's a lot of really good resources out there, Kenny, and that's really good advice. I mean, I think most of the exchanges nowadays, whether they're Bitcoin only or not, have some level of education section as far as best practices are concerned. I personally love BTC Sessions YouTube channel. Um, we're not getting paid to say that or anything, but just from my standpoint, I still go there and I learned a lot. Just watching the step by step tutorials, incredibly helpful. There's Bitcoin University out there, Matthew Cratter's platform. I think it's a little dated, but I think it's still very much relevant. So yeah, if you start poking around, like Kenny's talking about, you're gonna come across tons of different educational resources to this effect.
yeah. I don't know if there's any other topics that you want to explore. I mean, um, I know today was just going over the new metrics on the dashboard and a walkthrough strategies dashboard, and encouraging anybody listening to check those out and just have it as a resource for you as you're learning and exploring these options.
Yeah. I think we got a couple more things here. Did you want to run through the refi term sheet or save that for a different day?
We could just talk about it like kind of generally here. Like we're looking at a $8.4 million refinance. We're going to retire the existing debt. Um, and we're going to look at, how much we can allocate into Bitcoin and digital credit and how we do that. And what the best way to do that is from a tax perspective. And so we're going through the steps now. We signed the term sheet a week or so ago, and I mentioned a little earlier. We had the appraiser on site today, so hopefully he does a good job there. It's kind of a crapshoot with appraisers. You never know where they're going to come in. And our facility is in a unique location. It's on Aquidneck Island. It's a hard demographic to break into. It's a very tough zoning board, and just to get anything approved on Aquidneck Island is very difficult. So normally things like that can be overlooked if you got like a national kind of appraiser. They don't really um, value the location as much as they should, and they could basically give you the same kind of cap rate as a more rural located storage facility. But we'll see how that comes in, and yeah. And then we got a phase one. I don't know um, if everyone knows what a phase one is, but basically it's to make sure that there's no contamination on the property, and if it's basically like a yes or no, they're going to tell you, um, hey, there's something that we need to look at, and if you have to do that, you have to spend a whole bunch of money, do a phase two, and if the phase two will reveal exactly what was damaged with the property, and then you could have to clean it up. So don't anticipate any problems there because it checked out when we built the facility, and it's required normally every 10 years.
I didn't know a phase one was required every 10 years.
Well, for a bank, like if you're gonna do a refinance and there hasn't
Oh,
been a
every time
phase
you did it,
one,
yeah.
yeah.
Every time you
So
get a new loan, yeah, that makes sense. I mean, phase ones are matter of public record, right? They go back and search the previous uses, and if there's something that was considered questionable or dirty, they may recommend a phase two, which is basically when they, to your point, Kenny, they go out and they start digging holes in the soil and taking soil samples, and that's a whole another can of worms. But
yeah, we have
you'll be fine.
experience with other properties, having to do a phase two and then do the work to remedy it, and it can be pretty expensive to do so, and it doesn't necessarily have to like the dirty thing normally is like a gas station or an oil leak or something like that, and it doesn't necessarily have to occur on your property. It can occur on an abutting property that's you know maybe it's pitched downward and it comes and abuts your property, and your property was clean for decades and decades, and then one day they dig a hole at the right spot at the right time, and all of a sudden you got a problem on your hands. So,
Yeah, much more prevalent in the industrial warehouse sector, right? Get all kinds of uh, solvents and greases and all kinds of chemicals just in the day-to-day operations of whatever kind of business you have there.
yeah,
You
manufacturing,
made some
repair.
comments about the appraisal, Kenny. I mean, I think the appraisal industry is ripe for disruption, and it's long overdue. I mean, you want to talk about just an old antiquated process that has not been innovated on in many, many years. And there's also not a lot of new young talent going into that space. So there's just there's all kinds of issues with it. I mean, from my standpoint as a broker, it's like you give the appraiser, or the appraiser calls you, they're going out this day. They always want a copy of the purchase and sale agreement, and somehow, some way, their value, more likely than not, comes right in at that agreed upon purchase price, which, you know, I'm not trying to shoot myself in the foot here. We all want to get deals done, but you just, it makes you think a little bit as far as how much rigor is going into the valuations and the methodologies that they're using and all of that. But you think of, what we're doing here with AI, building these dashboards, transparent data, all of it. You get someone that's in that space, to start applying these new tools, they could spin up one hell of an appraisal business, where the data they have at their fingertips is incredible, and they could cut down the timeline significantly as well, right? I mean, you get a deal going, you have to get an appraisal. I mean, in the commercial side at least, it could be a 10, 14 plus day type of turnaround process, just depending on the situation. So you innovate and just kind of modernize the systems and the process a little bit. Not only do you get higher quality outputs, but you get them in a fraction of the time. So anyway, if there's any young guns out there listening to this and are interested in the numbers and the data, I think there's some really good opportunities, some low hanging fruit in the appraisal sector for you.
Yeah, and I mean that whole process, it's just so strange, right? Like the bank that we went with, they shoot us an email and it's got like 10 different options, right? And you don't get to see the names of the appraisers, right? You see the amount that it costs and the time that it takes to deliver, and you pick. And it's like they'll always tell you something like weird, like the cheapest isn't necessarily the best one, and you're like, what am I like? I'm picking a name out of a hat. It's just so you just kind of got to pick one. We decided to go with the one that was going to be the quickest because we don't know how long Bitcoin's going to be here for. Like we talked about it before, how appraisals you only get to do one a decade, twice if you're lucky. If interest rates are going down and you added some serious value to the property, you did a value add or you increased revenue in some way. you're only getting one refi a decade. So you really want to line it up. And like, I know when you're DCAing, you're just buying at any price. But when you do these lump sum buys, if you can help it, you want to try to time it as best as you can. And just given where we are with Bitcoin's price, like this would be amazing entry point for anybody. You're coming in 6 years later than the largest publicly traded Bitcoin company, and you're going to have a lower average cost than them if you buy today. So it's just like, you know, we're excited. We're excited. We're refinancing. This happens once a decade, right? And we're refinancing at it could be a generational bottom for Bitcoin. I mean, maybe we go down another 10, 15%, but um, trying to catch a falling knife is a dangerous game. So, the refinance, can't come soon enough for us.
Yeah, agreed. Agreed. Opportunity costs. Let's close out here with a couple of these current event, articles that we earmarked.
This is what I've been looking forward to, Chris. Like, there's something going on where someone's selling their house for Bitcoin or Polymarket shares or something, or what's going on?
Almost. We have Business Insider. There was an article a couple days ago, June 4th. There's a private individual put a Brooklyn home on the market for $6 million. That's not strange. What's out of the ordinary here is that they are willing to trade it for Bitcoin or Anthropic stock. And when you actually start to read through the article, I got the sense that this is not an isolated thing. It sounds like some of these higher end residential real estate offerings are, these are starting to become a little bit more, commonplace, which I think is really interesting. I mean, the Bitcoin and the Anthropic shares aside, I think if I'm, putting my broker hat on, I think they're probably just trying to signal to the market that they're willing to, get creative with deal structures. I think that always there's value there and always goes a long way as far as just giving the market, signaling to the market that we're open to being creative and flexible. Whether or not this actually trades for Bitcoin or Anthropic shares will be really interesting. I got to track this, and maybe we'll come back in 60, 90 days and have something to point to here. But I think it also, which is interesting, I think it just really underscores how things are changing and how people are thinking about not only storing value over time, but also mediums of exchange, right? I mean, there's not a mention in here of dollars, right? There's not a mention in here of stable coins, right? That someone's selling their real estate, right, which has been monetized over the last 50 years, for two things that arguably have, more upside. They're storing value better than what's being sold. So yeah, I think, if you're looking 5, 10, 15 years down the road here and, kind of overlay this over that time period, I think this is the first of many you'll see. And I think it has a really unique signal in the market as far as, people thinking about value differently.
Yeah, I mean the Bitcoin I understand. The Anthropic shares I would be a little weary of. I'm pretty sure I saw something a couple months ago about a similar thing in San Francisco, and there was like some discussion online, and I'll have to try to dig into it for next week. But I thought Anthropic came out with a statement saying that they weren't going to support, you know, um, shares that were being sold, like they weren't going to agree to it, because if it's a private company, the company needs to subordinate those transfer of shares. So like if you give your shares to this guy, your Anthropic shares to this guy for the house, he may get locked out of his shares. Like they may not honor those shares, right? Because they didn't authorize the transfer of ownership. So that's
Interesting.
something that I would be cautious about. And like Bitcoin, once you got 6 confirmations on the blockchain, you don't have anything to worry about. There's no reversing a Bitcoin transaction. So if it were me, I would accept Bitcoin on that deal.
You heard it here first, folks. Kenny wants Bitcoin. Okay, let's shift over to the next one here. We've talked about data centers on previous episodes, but I thought it was important to kind of bring it back up here today because it feels like this is just getting started and ramping up. I think we'll have a lot more headlines and stories, both good and bad, to talk about here in the the coming months and even years. But there's a battle taking place between the local communities and the developers. It's not isolated to a particular state or particular region. It's across the entire country. It's in small rural areas. It's in large cities. It's everywhere. There's the city. There's some large cities in Southern California that are trying to move forward with different bans on data center development. You have other towns welcoming it with open arms. So it's just, there's a lot of mudslinging going on. There's what's his name, Kevin O'Leary, the Shark Tank guy. I mean, he's been all over the feed with some of his Utah data centers. The community is really not happy with him. I think he's been having to bob and weave a little bit on some of his proposed projects. There's a lot going on in Ohio and Virginia where the community is pushing back really hard with some of these data center developments. On the other hand, in a more positive light, I mean, there's jurisdictions like Texas that are, welcoming this with open arms, right? And they're trying to, attract as much as they can and be a leader in the space. And I think what this ultimately comes down to is responsible development. I know that may sound a little cliche here, but without sounding too anti-development or just analog, so to speak, there's a right way and a wrong way of going about this, right? The city needs to engage, or the municipalities need to engage not only with their constituents and the residents, but they need to really do their diligence on the operators as well, and making sure that they're vetting them thoroughly and they're ultimately green lighting and partnering in some cases with the top tier players. Because when you don't do that, that's when you get the horror stories. That's when you get the bad situations, right? I think we've all kind of seen some of the videos go viral on the internet where there's noise issues, there's water issues, electrical bills go through the roof. I mean, it just becomes a very, very dire situation for certain people, and that's what you want to avoid across the board. So making sure if you're in the industry, if you're part of a local governing body, what have you, making sure that the process is done thoughtfully and methodically is important. Make sure you're vetting the operators and the developers as much as you can. I mean, people don't realize, I mean, even today, before you get all these LLMs and AI stuff, you're interacting with the data center every single day, right? Whether you know it or not. I mean, you think, you wake up, you check your social media, your online banking, you're using the maps feature to go, drive somewhere in town. All of that information is running through a data center. You are already using it. We're just taking that next step to build out the scale and the overall capabilities. We made it through the first data center wave without, completely nuking ourselves and the broader environment. I think we can probably do it again here if we just continue on that, responsible development path and have that as, the forefront.
Yeah. I mean, the first thing I think about is George Carlin saying, "Not in my backyard," and, just like how that's gotta be a thing, and it reminds me second thing is it reminds me of renewable energy and mostly the wind turbines. On Aquidneck Island, where West Main is, we had talking about vetting the developers, we had a developer that put in a wind turbine at the Portsmouth High School, and it stopped spinning like a year or two after it was installed, and then the company went bankrupt, and now it's just kind of an eyesore that reminds all the residents of the town about how they kind of got played by one of these, renewable energy developers. So that kind of stuff leaves a bad taste in people's mouths, and I'm sure that's happening with data centers. So the data centers are going to get um, bad reps in certain areas. It sounds like that could be in Utah. Maybe people have been taking advantage of the state of Utah because it's got cheap electricity and abundant space, and the climate is beneficial. Um, but I have noticed that, even though that we're seeing larger and larger data centers, SpaceX is gearing up for an IPO here. It looks could be this week or next week, and they're going to be deploying data centers in space. So I think they're going to be everywhere because also there's companies now deploying decentralized data centers at single family houses, at homes, at family residences where they put a small data center the size of an HVAC condenser, and they put it in your backyard, and they pay you like solar panel companies pay you to put solar panels on your roof. And now they're going to be putting these data center boxes on your property, and they're they're going to look for any way to expand because um, there's no limit. As long as if you give those things electricity, there's no the sky is the limit. Literally, the sky isn't the limit anymore because they're going to outer space now. Um, so they're limitless.
I'm glad you mentioned that because that's something that I think about, and I'm skeptical about the medium and long term just viability of this property type, right? I mean, data centers in the short term probably a really good bet just because there's the bottleneck and such a insatiable demand for it. But you start thinking out, that you factor in the time it takes to get some of these planned and permitted and built and energized, and you start to get into the mid and back half of the 2030s. It's like how much of that, you're not going to build every data center, on the ground. You're going to be having some in space. I mean, what I don't know, this is not my area of expertise by any stretch of the imagination, but how much of that load goes up above our heads? I have no idea.
I think it's gonna be like a majority of it within a short period of time. Um, Solar panels in space are way more efficient because you don't have the atmosphere there, and so you have a higher efficiency with solar. You don't have to worry about cooling because it's in space, and there's no real estate costs, right? Like you don't have to lease or buy a property. So um the opportunity there is huge. And I listened to Elon say that it's easier for SpaceX to deploy the data centers in space than it is the satellites from Starlink. And if you think about it, that kind of makes sense. Like the Starlink is you're providing signal to everybody's devices. Um, the data centers are kind of more centralized where you're just kind of you know you have a little bit more centralization going on with those data centers, I would assume. So it was interesting to hear that that's going to be an easier objective than what they're doing with Starlink. And they've already, how many I think there's like 60,000 Starlink satellites up there. We're gonna have like a full blanket covering the Earth with data centers and satellites. I don't know
Oh
if
boy.
Bill Gates needs to block out the sun anymore. Elon might do it with the satellites.
Someone tell Bill that he can go on to his next project, whatever that is. God only knows.
His mosquito project.
Yep. I gotta bite my tongue here before I get myself in trouble. We're live. Do we want to talk about your run-in on X last week, Kenny, or do we just want to let Tim close us out?
We can bring it up. I mean, I was kind of bummed. I got my first block. I got blocked, and I didn't really know how to feel about it. It was the strip mall guy, someone that I enjoy following. He does these great posts on retail shopping centers, and he shares kind of his strategy on how he goes out and raises capital and acquires these facilities, and he does a lot of cold calling, and he talked about, like, he had a viral post that really boosted him to the next level on social media, and he was mentioning how it was very helpful. And I just asked a question: what was the post? And I got blocked. I think he might have saw something that I'm involved with Bitcoin or something like that, because I think, reading between the lines, he was kind of anti-Bitcoin.
I don't know that the past tense verb is correct there. I think he is still very much anti-Bitcoin. But it's all good. I mean, it's all good. And I agree. I mean, I enjoy his content. I think he's done a great job curating his social media brand and providing value there. It's been a great source of deal flow for him, from what I understand. The thing that frustrates me a little bit is, just the unwillingness to engage in a conversation, and the unwillingness to, maybe think differently. I think the biggest frustrating piece for me the last however long it's been, year and a half now, on this Bitcoin real estate journey, is everybody wants to talk about being a contrarian, right? You go to these real estate conferences, whatnot, and there's always a keynote speaker, or some developer that finished a project and they're doing a case study, right? And everybody is just eating that up. It's great content, and the stories are always, I was a contrarian. I went left when everybody went right. I was buying when there was blood in the streets. Well, okay, that's awesome. This is a contrarian take, and now is the time to be a contrarian, but there aren't any takers. So everybody likes to talk the talk until it's time to walk the walk.
I'd like to get both of your live reactions to something that just hit the Kobesi letter 5 minutes ago. Breaking news, as they say. OpenAI has confidentially filed for an IPO. We are about to witness the most incredible IPO run in history. Your reactions.
You want to go first, Chris?
I think it's it's going to be one of I don't want to say many, but one of a select few here in the next few months. And I mean, I think all indicators are pointing to this is going to be one hell of a run. Some of the most anticipated IPOs in recent history, and I hope everything goes well for them. It's interesting, kind of bringing it back to Bitcoin here with some of the price action that's been taking place. A lot of really smart market watchers that I like to follow are saying that capital is chasing some of these. It's fleeing Bitcoin and chasing these opportunities. Which, I think that's really interesting, and how that kind of coincides with the decoupling narrative we've been hearing about for however long in Bitcoin, right? It's at what point does Bitcoin decouple from other risk on assets. If this is it, great. We've been talking about it for a long time. There's been a handful of other examples, over the last handful of years that, never really materialized. But I think this timing is really interesting, particularly following Jordy Visser's, silent IPO angle and research that he had put out a handful of months back. So, we went through our silent IPO. Now we can't, break back through 90, 100K to save our lives while everything else is ripping. Are we becoming that, is that decoupling happen? Are we becoming the risk off trade? I don't know. We'll see.
Yeah, I can't help but think about Ricky Bobby, and if you're not first, you're last kind of thing. I think Elon, SpaceX beat them to market, and I think that's gonna be devastating to OpenAI. I don't think like I think if they had moved first, I think it would have been better for them. Just because we're talking about large IPOs here. SpaceX, 75 billion at a $2 trillion valuation, somewhere around there. I know it's moving around, but they're sucking the breath out of the room. And, a lot of that capital is flowing from all industries, and Bitcoin being one of them. We've seen capital outflows from the ETFs, like the largest capital outflows since they started up. So I think every industry is going to see capital rotate out into AI to diversify into this, and SpaceX is just they just got more partnerships and more like opportunity than OpenAI. OpenAI is in a very tough situation. They're in a lawsuit with Elon, right? Like I know that it got dismissed, but it's going to go back to the next level of court there, the Supreme Court, and that's a drag on OpenAI. They're they don't have a social media platform like X to do their marketing and stuff like that for them. How are they going to launch their data centers to space? They're just and SpaceX announced a big partnership with Anthropic. Um, I don't know. I just don't know if it's good for them to just kind of come in with an IPO right behind SpaceX. I think that they should let the market absorb that IPO and maybe postpone it for a year. I think Elon beat him to the punch.
I mean, I think the Bitcoiner in me thinks, they're doing everything they can to keep this market going. They're going to pump so much freaking capital into the markets. They're going to throw gasoline on every fire just to keep the thing going. It really concerns me that they've been. I mean, this isn't my area of expertise again, so it's take it with a grain of salt. But it's like you see some of the headlines come through that they're changing the rules, for different index inclusion and access to different retirement accounts. That basically day one, if I'm not mistaken, as opposed to having to wait, that certain time period. So I don't like that. That does not sit well with me. I think the retirement accounts, our moms, dads, Main Street are going to be the exit liquidity for a lot of these insiders, and that pisses me off. I hope it all works out for everybody, like I said, but this is also why we Bitcoin. So.
Yeah, the last thing I'll say on that too is I heard like rumors. I don't know. I don't have like a source, but that the United States government may take large stakes in these AI companies because it's like a national security thing. And if we want to be, Trump has used the term the crypto superpower, or the AI superpower. That you know that may become a reality where the United States wealth fund acquires shares like they have in Intel and SanDisk. Maybe
MP
some of these,
Materials.
yeah, Micron, right? or maybe not.
I don't know
But-
about Micron and SanDisk, but definitely Intel and MP Materials. MP Materials is a rare earth.
Yeah, I might have mixed those up. Don't quote me on that.
Yeah, it was a day or two ago. Trump on Air Force One or wherever he was, must have been Air Force One because he doesn't ride on Air Force Two, was saying that exact thing that you were saying, Kenny, that, maybe we should consider, and that he was going to bring the AI leaders to the White House this week, next week, sometime soon. So that'll be interesting to see how that develops. And the meme that was going around was the stock market's down for one day and Trump's out there saying, we need to have the government invest in the AI companies. Right? He's like, no, it has to go up. We're going up. That's why so many of my posts, I just repost something and just go higher.
To your point about the market sentiment changing on a dime, I mean, just last week the sky was falling and like all hell was breaking loose. Stretch was losing par, and that was the end of strategy.
It's so
And
over. So over.
and then today it's like they bought 50 times the amount of Bitcoin they sold last week, and
we're so back. We're so back.
Yeah. So it's going to be a long summer, I think. A lot of volatility this summer.
Maybe more than usual, because usually, right, sell in May and go away. But I think they're going to keep the market and all of us with our heads on a swivel through the election if, humans do what humans do.
Yeah, it's just getting started. So buckle up. And if you don't have the stomach, check out now, because it's not getting any better.
Yeah. Any additional closing thoughts, Chris, Kenny?
I think that's it for us today, unless Chris has something.
Nope, I'm good. Bring us home.
All right. Well, thanks everyone for listening and watching episode 23, The Digital Age of the Real Estate Standard Podcast. If this conversation was helpful, please share it with someone, a partner, a client, somebody making real decisions in the marketplace. New episodes drop weekly. And until next time, on behalf of Chris Drizga, Kenny Alves, and myself, stay disciplined, think long-term, and stack sats. This is the Real Estate Standard. If you enjoyed today's conversation and you own commercial real estate, we'd encourage you to think about how these broader shifts might impact your own property over the next decade. Many owners are starting to reconsider how they structure their balance sheets, manage capital, and position their assets for the future. If you'd like to explore how some of these ideas might apply to your own situation, you're welcome to reach out. We work with property owners and investors to think through strategy, structure, and long-term positioning in a rapidly changing market. You can find our contact information in the show notes. And as always, thanks for listening.